And welcome to today's panel on fintech powering e-commerce and cross-border trade logistics under AfCFTA. Thank you. Yeah. So some of you this morning probably heard His Excellency Wongel, who was telling that basically during his address, he was saying that the success of the implementation of this African Continental Free Trade Area agreement is a collective responsibility. So we know that fintech is playing a crucial role in enabling cross-border trade and boosting e-commerce. So our discussion today will explore how fintech innovations are transforming logistics, payment systems, and digital infrastructure to support the growth of trade. Joining me today, we'll hear from Ruben Mooneesawmy. I'm so sorry. Joining us from Mauritius, he's the CEO of Numeris. Thank you very much for being here. Welcome. We also have Adetola Oloke, who's the head of sales and partnership at Cora. Hello. Next, Adetola, we do have Ruben, who's the manager of global acceptance for M-Pesa Africa. Hello, Ruben. Next to Ruben, Eben, CEO of WeWire. Thank you. And we have Miss Seble, who's area manager for Kenya for Ethiopian Airlines. Welcome. And last but not least, Hio, who's the co-founder and CEO of 14365. So we have a lot to discuss today. So just want to jump right in. Thank you for those at the back. Either please be seated or we can hear a lot and I don't know if my panelists can hear me. Okay, good. So Ruben, I will start with you. I'll direct that question to you. So Africa is now the world's largest trade agreement, right? It impacts 1.4 billion people. There's a huge addressable market for any businesses. How do you see the agreement changing the way Africa trades? And what does it mean for ordinary Africans and businesses?
Thank you, Eloine. Good afternoon, everyone. Um, look, let's start with the positive news. Okay. If you look at the recent numbers, trade numbers, intra-African trade has increased by 3% from 2000 between 2022 and 2023. These are the latest numbers published by Afreximbank. It might not look like a lot, but it's actually, if we need to take that, it comes at the backdrop of a global economic slowdown, volatility in prices, currency issues, volatile political environments. I think what it says is that it is definitely a good step in the right direction. And let's not forget that the ultimate aim of uh, the Africa, the Continental Free Trade Agreement, when it was executed, was not just about trade. It was also a heavy focus around how can we get people out of poverty. And that's very important. How does trading, investments, uh, free flow of services, free flow of people uh, can act as a catalyst to get more than 50 million people out of poverty or extreme poverty. And I think the recent numbers is a step in the right direction. Having said that, on the flip side, you still have a couple of countries, um, controlling the lion's share of the total intra-African trade. South Africa, for example, remains the dominant part of it. Like they control around 20% of it. And I draw the parallel to Mauritius, where I come from, uh, where South Africa is the number one partner from an export or import perspective. So this disproportionate share is what we hope for will change or evolve over time, that other countries that this will be rebalanced across other countries in East Africa or West Africa or North Africa. But there will still be some, not necessarily on the flow of goods, but on the flow of services. I think for some time we should still see some countries dominating that. Just to give you some numbers, if you look at historically, even prior to the free trade agreement being here, there were 5 countries which dominated more than 75% of FDI into Africa, Mauritius being one of them after South Africa. And last year's almost half of the FDI in Mozambique from. So we expect, as we grow, and we've signed a free trade agreement with China and India as a small island, becoming the Asia-Africa corridor. We expect this FDI in services to increase even more. That's why I see it. Thank you.
Thank you so much. Aditola, I want to talk to you about currencies. So obviously this agreement comes with complications. The continent trades with over 35 currencies. There are significant account deficits along with dollar shortages. How can payment innovation such as PAPs and private sector settlement instruments help alleviate some of these challenges?
Okay, thank you so much. I'll say one of the challenges we have in Africa is multiple currencies, just like you said. Look at Europe now. Most of the countries in Europe use the euro. How would it look like very soon? We have just one single currency in Africa. And apart from that, because a lot of currencies in Africa, the base is the US dollars, right? And dollars keeps on fluctuating, like really fluctuates a lot. Now, what we've been able to do at Cora is a payment solution provider for Africa. And we've been able to build payments. Right now, we're in 6 African countries, and we can collect local payments in local currencies in those countries. And on our dashboard, you can flip those currencies between each other. So I always give this analogy. I'm from Nigeria, and one of our neighboring countries is Ghana. So if you want to do a trade between Nigeria and Ghana, for example, you want to buy probably the local fabric, like the local ashoke or adire, it's probably almost easier for you to just put your money in your breast pockets and just take a flight, or just like drive down from Ghana to Nigeria. But then it comes with so much risk, and that's what we've been able to do at Cora, right? So a trader, whether you're in Nigeria, Ghana, Kenya, South Africa, Cameroon, Cote d'Ivoire, you can buy goods and services anywhere in Africa in the local currency. And then you can convert, whether you're converting from Nigerian Naira to Kenyan shillings, right there from the Cora dashboard by simply integrating just one single API. So we've broken down the barriers to payments and facilitating trade across Africa.
That's brilliant. Thank you so much. So still staying in the payment space, Ruben, we can't, no one needs to get introduced to M-Pesa, the real revolution of the continent. But how are your payment services? Like, I guess this question is an opportunity for us to understand a bit better how you accelerate cross-border trade and transaction.
Thank you so much, Eloine. So at M-Pesa and specific to cross-border payments, we've built APIs. If you're in Kenya, I'm sure you've heard of the Daraja APIs. If you're in Tanzania, we've also equally exposed M-Pesa services through APIs. So basically what we've done is allow global partners, global merchants to be able to access M-Pesa rails and make payments, or basically M-Pesa customers make payments to global websites. So what that has essentially done is that it has allowed merchants or partners who don't have a local presence in the African continent to come and access M-Pesa customers in whichever markets where M-Pesa has a presence. What that means is that M-Pesa customers will be able to access products globally, and of course pay with their preferred mobile wallet. Just to narrow down on some of the challenges we've seen and why PAPS is critical to this. settlement of cross-border merchants is a challenge. Our undertaking and our promise has always been, can we make the payments within 7 days? But the constraints that we see, especially from a Forex perspective, cannot allow us to fulfill that commitment. So the question has always been, how do we improve our TAT from 7 days to even, let's say, one day? What happens if you look at the Continental Free Trade Agreement through PAPS? We should be able to not only offer instant payments, but also see how through the pre-funding model, we can be able to settle merchants on a real-time basis.
Thank you, Ruben. Oh, someone's clapping. You brought your fan group with you. Can someone clap for Adetola? Okay. So Eben, hello. So WeWire, we're talking about currency convertibility, which is a critical issue. You're an expert. You've been traded over 1 billion in Forex since 2021. Can you tell us what challenges do businesses and countries face in this regard? Beyond PAPS, and we started talking about solutions with Cora, but what other solutions do you foresee to address currency challenges in African trade?
All right, thank you. So I believe we've been talking about the payment aspect of AfCFTA, which is PAPS. But the core thing is for the trade or the payment to go through, we need African currencies to export more to each other, because that is the basis of the problem, which is you get countries where one country is exporting more than the other country is exporting. So you go back to the fundamentals of economics. If there's more demand on one side than the other side, you can't match up, because fintechs will come into place and provide liquidity, but that liquidity will come at a cost, because at any point in time, liquidity shifts to one market and it has to balance it out. Although PAPS is here also to kind of solve this same problem, again, business has to grow. By saying business has to grow, we have to pick markets that say, for example, Ghana is exporting ABCD to this African market, whilst importing ABCD from other African markets. We need to start producing and exporting more, then we'll be able to fix the currency issues, because we will have more countries who will be bigger than others. So if we don't find trade that we depend on each other to balance it out, we'll still have the problem of FX years to come.
Yeah. So let's move on. And I want to ask the attendees, how many of you flew Ethiopian Airlines to come here? Okay. How many of you flew Ethiopian Airline in the past year? Not bad, huh? So Seble, you're area manager for Ethiopian Airlines. So a key principle of this agreement is that it is free movement of goods and people. So it obviously requires a substantial infrastructure investment. And I think, Ethiopian Airlines have done a phenomenal job in terms of trade through your cargo services, your passenger flights. Can you give us an opportunity to maybe elaborate on your operations and also how your cargo service really is driving e-commerce across the continent?
Thank you. Thank you for making Ethiopian Airlines your choice for your trip. And the rest of you, I'm sure you will have that opportunity very soon. Right, Ethiopian Airlines, as its mission, offers, safe and reliable market-driven transportation service for people and goods and services. It is 78 years young since its establishment. And currently, we are operating in 139 international destinations, out of which 65 are within our continent, Africa. So as we finish our fiscal year in June, we transported about 13.9 million passengers. Our baseline for comparison is, the year just before the pandemic period, which was like 12 million. So yes, we have survived the pandemic, and actually this year we have surpassed that figure. In Africa, Ethiopian Airlines is building on the Pan-African Open Sky move, have established a number of partners, starting from West Africa, Sky Airline, established by ASKY, run by Africans, established by Ethiopian, and also, run and managed by Ethiopian. It has been established in 2010, and in less than 15 years, it managed to transport 1 million passengers just last year, connecting 28 cities, mainly connecting, the central and western regions of Africa. Before that, the people and goods in that region needed to move, even from point A to point B, which were neighboring cities. They needed to move as far as Europe to get from point A to a neighboring country, point B. This has tremendously improved the service, lowered the cost as well for both people and goods to move. In addition to Sky Airline in West Africa, we have airlines, partner airlines in Malawi and also in Zambia, Lusaka. Having said this, with respect to cargo, first of all, cargo was our lifesaver, especially during the pandemic, not only for the company, for many Africans. There was a fast, quick decision by the management, depending on our internal capability of converting the passenger aircrafts to quickly to freighters. And we managed to transport, personal protective equipment as well as medical supplies, including vaccinations then, to 54 countries within Africa within 5 days. And the company sustained that challenge at that time because of this. And recently, we have just launched it this year in the month of March, cargo e-commerce, which is basically bridging the logistical gaps in Addis Ababa. So it is just, of course, progressing. At the moment, it is, offering, providing range of services like consolidation, deconsolidation, packing, labeling, sortation, etc. This has changed the traditional way of the goods movement, or what we call cargo movement. What it used to be, what was limited from one airport to another airport, now is, from an airport to, door end-to-end service, door-to-door service. And this is, and also, there is a transparency with that. Anyone can see on which day, on which flight that a shipment can be sent, forwarded. They can see, anyone can see how much the rate would be. All right. So, and for example, to give an example of, let's say, consolidation and deconsolidation, let's say that there is a shipment, an item that somebody will order from China and from South Africa, sitting in South Africa, another one from Lagos, another one from Kenya. So it will easily, the e-commerce will enable easily to consolidate those, bringing, consolidating them and bringing them from China up to Addis, and then deconsolidating them and distributing them to Johannesburg, South Africa, Kenya, and Lagos. This will greatly reduce the cost of, freight shipment, good shipment, and facilitate the service. It will be, anyone can be, is able to trace the status of a single shipment using the e-commerce. So in this manner, today, this facility has a capability of 150,000 tons, the e-commerce only. But all in all, our cargo service has shipped, as we finish the fiscal year, 713,000 plus tons of shipment. We have a total of 69 cargo destinations, out of which 34 are within Africa. But with for this, as far as, instead of, again, that point, African countries and governments, as long as they work on implementation of their policies and adapting the African Free Trade Area, or what we call in our industry the Open Sky Agreement, still it will be possible to further reduce the transportation of goods, like from South Africa to Lagos. It doesn't necessarily have to pass through Addis Ababa. So in this manner, Ethiopian Airlines is investing on its infrastructure and also sharing its experience and safety regulations, maintenance, and also training to its partner airlines as well in developing the aviation industry within Africa. Thank you.
It's impressive work. Thank you so much. Here we're staying in the logistic world because this is an intradisciplinary panel. Sorry, English is not my first language. So we know that there are high logistical costs, and that's a major problem to cross-border trade in Africa. How does your company, One Port 365, is addressing this challenge? Can you share some examples of how you successfully implemented solutions for trades across the continent?
All right, thank you so much for that. And thanks for the introduction as well. So, sorry, we're 1.365. Annually, we probably move about plus in the region of 10,000 containers annually through our pipeline across 5 different markets in Africa. Across different locations, maybe about 90% of our customers are customers who are moving containers. Then we have about 10% mixture that's mostly air freights. And the most expensive freight cost is moving freights within Africa. This morning, I still signed an invoice to move cargo from Equatorial Guinea to Accra for 1,500 for how many tons? It was not even up to a ton, basically, right? Moving cargo in Africa is ridiculously expensive. And people point out to this and say, okay, what have we done? Well, what we've done on our side is we can, introduce technology to simplify a lot of the processes, and that's what we abide by. We basically simplify and streamline cross-border traders for African importers and exporters. But the biggest challenge is this: you can only optimize a system that's in place. We can't build the infrastructure. Basically, so the infrastructure has to improve. That's the reality about it. It's cheaper to import at times from China to Mombasa than to import from Lagos to Mombasa. It's entirely it's ridiculous. We have customers who are trying to move freight from West to East Africa, and you look at the system, it's telling you 63 days, whereas from Nagoya in Japan down to Mombasa is 31 days, half the time, right? So how do we improve on that infrastructure? Why must cargo that's destined from East to West Africa have to go to Europe and sit in Europe for 2 weeks before it comes across into the continent? We need to improve on terms of interconnectivity within the African continent, and that's the most important part, right? Once interconnectivity improves within regions, with sub-regions, then costs starts to decline. Costs start to decline, even within some locations. I mean, we also have, for some of the top names, moving cargo, Lagos to Accra, all within West Africa, via road, 21 days, because it gets to one border, it stops, you have to fill this paperwork, it gets to another border, right? There are borders crossings within West Africa whereby you have to pay full import duty for a particular country and get your import duty when the cargo has left the country. It's ridiculous, basically, right? So the most important thing is, first of all, we need to improve on interconnectivity within the continent. That is very, very paramount, right? And then once interconnectivity improves, the cost of moving cargo significantly reduces. But the infrastructure needs to improve, first of all. I don't need to move cargo from Nigeria to Cameroon and it has to go through Paris, first of all. No. That shouldn't be happening in 2024. So we can do a lot more better. In terms of what we've done, basically, our software, which gives us, which is some proprietary technology we've been able to develop, helps us advise clients in terms of what we call route optimization. So you want to move 20 tons, let's say, of dates from, I'll say, Cape Town here now down to Mombasa. onto our system, it can give you what's the best route option and what's the cost per ton in terms of calculation. And based on that, you can say, I want to go with this plan, I want to go with that plan, I want to go with the most expensive or the cheapest. For most African traders, they're heavily price cautious, basically, right? And so we are very, very there in terms of providing efficiency at an affordable cost. That's a very critical thing for us. But at the same time, like I said, we can do a lot more better and we can improve significantly when it comes to interconnectivity. And I'm super excited to hear what Ethiopian Airlines is actually doing on the air freight side of things. So more of that, hopefully. Thank you.
Thank you. So just to give some background, because here when I first met you, you were pitching, and it was 2 years ago or 3 years ago in DC. And you were part of the pitch competition. It's absolutely amazing to see you here today. See you're doing well. Congratulations. And that leads me to a question for you, Ruben. So Numeris, you work on company readiness and valuation. I'll give you my mic. Yeah, okay. So please tell us a bit more on how this is also impacting the conversation we're having today.
Sure, thank you. And I had a very interesting discussion with Javier as well. I think, look, I think if you were pitching before the free trade agreement actually being a reality, you would have quite a bit of trouble to convince investors that, uh, you know, you're addressing the whole African market. I think what the Continental Free Trade Agreement did is that it gave us the opportunity of trading with a unified market. But that will translate into valuation over time. We're still going through the implementation phase. It's going to take a couple of years, at least, to really convince, I guess, investors that our projections are now way above what we initially thought, because we've got the free trade agreement, ratified. Um, so that's one aspect. What I think is going to happen is as the tariff barriers and non-tariff barriers are being removed gradually, and Ayo will hopefully confirm that. Definitely, startups like OnePoll, their projections would just move, quite high up, because they're now in a position to uh, clearly have less regulatory hurdles in moving goods. There'll be harmonization, hopefully, of customs control and border controls and all that. Um, so I think there'll be the next couple of years will be exciting for startups like OnePort and also fintechs that's also empowering cross-border payments. At the same time, what I think is going to happen is that there will be obviously more startups trying to see if it can get a piece of the bigger pie. And the question will then be, what are you doing? What that's different from the one port, the flex port, or the M-Pesa, trying to enabling cross-border payments. And that's going to be an interesting different factor to see. How differentiated are you today to be able to compete with the existing ones and really break this cross-border logistics and payment space? I think that's what's going to happen.
Thank you. This will be my last question for all of you, but I want to link it to you, Adetola. Cora, can you give us some success stories, and also what do you think? How do you see intra-Africa trades going in terms of e-commerce, and where do you see it heading in the next 5 to 10 years? Can your solution be part of what we see in the future?
So I see African trade not just for Africans, for Africa, but globally. One of the success stories we have at Skura is enabling e-commerce, right, in Africa. So you think of you want to buy goods from, let's say, from AliExpress, right? And what we do is that we enable all these e-commerce merchants to be able to they want to send goods from China or wherever in the world, send it out to Africa. They can collect their funds in USD. Payments can be done locally, whether in Naira or KES or GHS, whatever currencies. Like I said earlier on, we're in 6 African countries, and we enable not just collections, but also settlements within those African countries and within all the major currencies of the world, both GBP, euros, and in dollars as well. So what I see for Africa is simplified payment, right? Because if payment is really, really simplified, people can pay for goods in the local currencies. They can move those funds across Africa in a very fluid manner, right? With less restrictions. It's going to really open Africa up to the world. We're doing it, but then it's always going to get better. That's what I see. Thank you.
Excellent. Thank you. Ruben and Pesa, where do you see us going in the next 5-10 years?
So for me, I'll first say M-Pesa is big on strategic partnerships. We've partnered with quite a number of fintechs, quite a number of schemes to spur payments across. And I see once after it's fully implemented, there'll be a great opportunity to scale. If you look currently at the M-Pesa merchant base, we have over slightly above 1 million merchants. Most of them are micro and SMEs. All of them desire to have their products sold across the continent. And this presents a huge opportunity for them. So for me, in the next 5 to 10 years, ideal is to say, how can we have merchants in, let's say, DRC sell their merchants in Ghana? How can we have a Ghanaian merchant showcase their produce, whether it's the Ghanaian kente here in Nairobi, with a lot of ease? For the end consumer, of course, what that means is that how do we achieve that at the lowest of cost? So to me, in the next 5 to 10 years, the bigger question is from an M-Pesa perspective, how do we upskill our SMEs so they take advantage of the opportunities and be able to scale their products across?
Thank you, Ruben. Eben?
Yeah, hello. So what we're doing at WeWire is we're able to power small businesses, be able to invoice in their local currency to businesses in other markets, and they're able to also pay in their local currency right on the invoice. So it's a smart invoice solution that we have in place. We're working with trade unions, trade corporation. There's one big trade corporation in South Africa called Trade Breaks. We are trying to work with them across the African market because they have a lot of suppliers in the space. So we are working with a lot of the trade unions that move a lot of the SMEs from part of to be able to invoice and send payments to their counterparties in the different markets. So that's what we are doing to help with trade among Africa grow.
Thank you again. 5 to 10 years with that coincides with our what we call Vision 2035. Based on those objectives of 2035, already the airline is investing, to acquire more fleet size, both for cargo and passenger side. By that time, the current fleet size will be doubled. And then it is expected that the African youth will be, more informed, demanding and driving of the e-commerce. So there will be more intra-Africa e-commerce transactions by that time. And this will be better facilitated maybe in a lesser period of time. Again, I will have to repeat, if the open sky agreements are implemented, if countries amend and synchronize, align their policies with the African Free Trade Area policies. With that, there will be Ethiopian Airlines will be also contributing. We'll look for more partnership to develop again the African aviation industry within Africa. As we speak, Ethiopian is named, of course, as the leading aviation group in Africa. And including Ethiopian Airlines, the total number of passengers that we transported, 13.9 million. Added with the rest of passengers transported by other African airlines, as we speak today, is less than 20%. All the rest, to and out of Africa, is being transported by non-African airlines. So with more opening of borders, with implementing the open sky agreements, we'll be able to see the African skies by more African airlines. Thank you.
Okay, thanks for that. So we're excited, and we think what does 5-10 years look from now? I think it looks bright. Let's say for us at one port, 2 years ago we had maybe less than 2-3% of our customers moving into Africa. As of today, it's already getting into double digits. And I'll attribute that largely to the impact of the African Free Trade Continental Agreement, basically, which still needs to constantly keep improving. So I think the future is very, very bright, and I think that's a good thing. But like I've always emphasized, for us to get to that, what I'll call holy grail, where we see ourselves in terms of even opening it a lot further, right? We speak a lot about payments, we speak a lot about moving money, but we don't really speak much about how we can move the goods faster and more efficiently. That is the holy grail in which we need to improve upon. So by the time we start having those infrastructure in place, basically, that solves how do I move cargo from South to North America and North Africa in a very efficient way? How do I move containers from East to West Africa in a very efficient way? We combine that with our payment solutions that we've come in through solutions such as PAPS. We're getting somewhere. If we can do that over the next couple of years, I think in reality, the sky is just the beginning for us.
Thank you. I couldn't have ended in a better way, basically, to say that it is a combined effort. Thank you all very much for working towards that future. Thank you for your presence today. Thank you to the audience. Please, round of applause for our panelists. Thank you.